Thank you so much. Welcome. Good evening. My name is Brian Gutierrez, and I am a program manager with the Unit of Professional and Continuing Education at the University of Washington. Again, thanks so much for joining us tonight. It is my pleasure to host this evening's Expert Insights webinar, Exploring Entrepreneurship Through Acquisition. All right, so before we get started, I wanted to say a few words really about who we are. University of Washington's Continuum College, believe it or not, has been around for over a century. It was established in 1912, and our role is to expand the University of Washington's impact by meeting learners where they are in life and helping them get where they want to go. We do that by offering relevant, flexible educational experiences, really the right programs for the right people at the right time. Our goal is to make sure anyone can access the knowledge and opportunities they need through the University of Washington and use that to make a greater impact in their work and ultimately in the world. Within Continuum College is our professional continuing education unit, where we offer a wide range of program options. We have certificates, degrees, individual courses, specializations, and within those, built-in professional networks. And these programs offer hands-on practical experiences. The idea is to make it possible for people to learn anything from anywhere. So whether somebody wants to update their skills, explore a brand new field, or take the next step in their career, there's a class for that, and ultimately there's a path for that. So it is my pleasure to welcome you to our Expert Insights webinar, and this free series brings together our instructors who are also industry professionals, and tonight we're very fortunate to have, in addition to the instructor, advisory board members. And they're here to share what's trending in their fields, the tools you might need to succeed, offer practical career advice to help you stand out in today's market. And I'm especially excited about tonight's panel because the conversation really feels so timely. With some of the recent disruptions in the labor market, many people are considering a second or even a third career. And it's a wonderful opportunity to hear from this panel about what a second or third act might look like. So with that, it is, again, my distinct pleasure to introduce our panelists. First, we have Christy M. Johnson. Christy is the founder and CEO of Artemis Connection, a boutique strategy consulting firm that blends data-driven decision-making with human-centered design to help organizations reach their goals. A former McKinsey engagement manager and award-winning educator, Christy has led initiatives across industries including venture capital, technology, media, private equity, and healthcare. She holds dual master's degrees in business and education from Stanford University and is passionate about sustainable leadership and developing human potential. Next, we have Nikita Sunil Kumar. Nikita is entrepreneur in resident at Trilogy Search Partners based in Mercer Island, Washington. She joined Trilogy following a successful exit as CEO of Crown Health, a former Trilogy portfolio company. Prior to her work in entrepreneurship, she was a consultant at Boston Consulting Group and a production engineer at Boeing. Nikita holds a bachelor's and a master's in mechanical engineering from the University of Southern California and an MBA from Northwestern University's Kellogg School of Management. She's passionate about increasing the pipeline of women and minority searchers and supporting inclusive, sustainable career paths in the search community. Next, we have Kara Gibson Bristva. Kara is managing principal and second-generation owner of Exit Equity, where she helps privately held business owners navigate the process of successfully exiting their companies. With experience in valuation, merger and acquisitions, and strategic planning, her team has guided hundreds of businesses through successful transitions across industries, including manufacturing, technology, and consumer products. Kara holds an MBA from the University of Washington's Foster School of Business, a BA from Smith College, and is a certified business intermediary and an elected board member of the International Business Brokers Association. And last but not least, we have Aaron Perrine. Aaron is a managing director at Trilogy Search Partners, again based in Mercer Island, Washington, and he worked closely with entrepreneurs and investors in healthcare, government services, and software sectors, serving on boards of several portfolio companies, including Ennoble Care, Clarity, and IT Pipes. Prior to Trilogy, Aaron was a consultant at McKinsey and Company and served in the U.S. Army. He holds a BA from Whitman College, a JD from the University of Washington, and an MBA from the Wharton School at the University of Pennsylvania. So tonight's format, we'll begin with a background of ETA, entrepreneurship through acquisition, framed by Christy Johnson, and then we'll turn things over to Nikita, Kara, and Aaron to talk through 3 different ETA journeys. That'll be followed by the audience Q&A. And please feel free to pose your questions to the panel or a specific panelist by entering your question in the Q&A portion of that Zoom tool. And so, without any further ado, I'll turn things over to Christy Johnson to talk to us about the background of ETA.
Well, thanks, Brian. And are you able to hear me okay?
Yes, perfectly.
Great. Yeah, today hasn't gone as planned. Why can't people in Seattle drive in the rain? But I'm here and I'm so excited to connect with all of you about ETA. And what's great about this is it's a wonderful opportunity for maybe some of you who've always wanted to be an entrepreneur, who want to own something, to not have to go through the messy 0 to 1. Because I'm on my 4th startup. I'm sure some of you that are on this call have done startups. It's a very messy, unstructured process, and it has a mixed rate of success. But the great thing about ETA is there's an opportunity to acquire an existing business from somebody who's maybe looking to retire or wanting to move on to another adventure. And you then get to think about, how are you going to scale this business that's happening? So the concept is, you find an existing business. These are usually, kind of 1 to 10 million in revenue. And the tricky part is you have to convince a business owner why they should sell their business. And I mean, if you know any business owners, often they think of these as, children. They'll refer to them as their baby, and why they should, hand their baby over to you. And then the real work happens, because you have to do the diligence and really understand the space and think through if your capabilities and experience matches what the business needs. And then, once the deal closes, you then are the owner, and you get to grow it and scale it and think about where you want to take it. So we can go into a lot more of the details about that in the Q&A. I'm trying to guess what people might be interested in. We did find that in a lot of the other regions, there's a richer ETA ecosystem. We're super fortunate to have, Aaron and Trilogy here in the Pacific Northwest, Kara in her role as a business broker, and then many successful searchers like Nikita that are in the community. And we're very excited about the University of Washington really being the hub for us to learn together, and then also to get more happening in this ETA or search business. And part of the reason why is we do have, a bunch of boomers that have built amazing, wonderful businesses that are getting to the age where they're trying to figure out what to do with them. And in some cases, their kids or their family members might not be interested, or in some cases, the business owners might not want their kids or family interested in the business. And so it's really sad when those end up just closing because there wasn't somebody that was able to come in and grow and develop it. So this is really meant to be mutually creating value on both sides, the business owner side, and then also for the person who comes in as the new owner. And there's lots of examples. You're going to hear about some of this from your panel. But again, we're very excited to have this happening in the Pacific Northwest through the University of Washington. Washington State has about 92% of its employees working for small businesses. And it's really important for the state and also just our local communities to have the local businesses be healthy and vibrant and continue to live on. So with that, I feel like we need to turn it over to our amazing panel. If you don't want to hear from me, does that work, Brian?
That was perfect. Thanks so much, Christy. Yeah, great framing. So we'll turn things over to Nikita.
Great. Thank you, Brian. Thanks, Christy. Hi, everyone. I'm happy to share a little bit about kind of the story of my search, and a little bit about kind of the day in the life of a searcher through the many stages of looking for a potential acquisition. Just for some context, I found out about kind of ETA and the search path during my MBA at Northwestern. And the model of the ETA that I learned about was what we call traditional search, where you're actually going out and raising a small fund that will finance the search portion of this, ETA, where you're actually building kind of tools and infrastructure to go out and reach many business owners. Usually, these are cold outreach kind of processes where you're emailing or calling business owners in a particular sector that you're interested in, and then trying to get connections and trying to build a proprietary pipeline of deals that you can then evaluate. You also work with brokers like Kara to build a pipeline of deals that are already effectively for sale or on the market. And then that's also another channel to source opportunities from. I started searching after graduation. Basically, I went to BCG to consult as a general consultant for a couple of years. And during that time, it really became very clear that I wanted to search, and it was something that I was going to regret not doing at that stage of my life. So um, around a couple years into my consulting career, went out and started to meet different investors who could teach me about the process. Started thinking about what industries were interesting, where there were trends for growth and potential sort of opportunities to acquire in the coming years. And that was all sort of the process of thinking about search and getting ready. In 2019, I actually decided to pull the trigger and go out and actually raise my search fund. So on this chart here, you'll see that's the far left. In that process, I got a chance to meet the team at Trilogy. Really enjoyed working with them and learning from them about how to search. I set up my search fund, which was putting together a thesis of the industries I wanted to look for, starting to build lists, attending conferences, and talking to brokers who specialized in those industries, putting up a website and kind of preempting the questions that I knew I was going to get from business owners about who I was and who my investors were and why I was interested in their particular business. Um, and kind of that whole stage of the process took me a couple months to kind of get everything set up and get going. Nowadays, there's a lot of resources that have come up that can be very helpful in this stage of the process, and different investors can be helpful with that. The other option is, a lot of resources exist for you to start searching on your own if that is what you choose. There's databases of businesses, broker listings, et cetera, that are easy to find on the internet today. Then you kind of move on to actually evaluating businesses, looking at deals. In my case, I part of that initial process was also networking with different folks, and actually that's the time that I had a chance to meet Christy. And in talking with different folks, I kind of made it clear these were the things I was looking for. I was really interested in a few trends at the time that kind of are still very powerful trends. One obviously is, aging population. There's going to be a lot of need for services that serve folks that are seniors and kind of older at the stage of their life where they need more healthcare, different types of non-healthcare services too. And just, there's a sort of a trend there that will benefit certain types of businesses that can be very interesting. And sharing that with different folks, actually, Christy and I reconnected, and there was a business that was available, or there was a founder who was interested in selling here in the Washington State area. And this founder was a healthcare professional who had built a home-based primary care business. She had started as a solo practitioner out in the field and had grown gone through that 0 to 1 journey that Christy was talking about, where she had put in some of the pieces that she needed to be able to scale. She had hired other providers, kind of put together all of the elements that are needed to start billing insurance for their services, which was largely in senior living homes. But they were at a point where they were ready to exit. So I got connected with them, really started to build an understanding of how the business worked today, what changes needed to be made in order to grow in the future. And so that whole process of really searching for and acquiring that business took me probably 6 to 8 months of work of just understanding the industry, but then also negotiating the deal, working with different service providers like accountants and lawyers to really evaluate the business, working with my investors to raise the money to actually buy the business. So can go into more detail there depending on what questions people have. But that ended up being kind of a whole phase of the journey that's very distinct from searching, or that initial kind of process of raising a search fund. That deal went through in early 2020, coincided very neatly or tragically, you could say either way, with COVID, unfortunately. So the very first part of my operating experience was really dealing with the chaos that COVID brought to the practice. We were in senior living buildings. Pretty much 10 days after I bought the business, we were no longer in senior living buildings. So really had to set up a whole new sort of virtual practice to serve those patients that we still were the primary care providers for. Um, and there was a lot of changes that needed to happen in terms of the technology, the infrastructure, the processes, even things like how I was going to be able to meet my team because everybody was all over the state. And there was no way for me to go out in person to meet many of them. So a lot of changes in that first year and a lot of opportunities too to invest in the business and make some really critical improvements and decisions and choices that would help us grow once COVID had passed, or I guess maybe not truly passed, it hasn't, but we had returned to some degree of normalcy. Um, I ended up staying at Crown for 2 years. There was a lot of change in that time period in the industry overall. There ended up being a lot of interest in this model of home-based primary care naturally because people understood the value at that stage, I think, very well after COVID. Pre-COVID, it was actually kind of interesting. There was a lot of people who kind of didn't get it. And I even had some investors kind of say, well, why wouldn't I just keep going to the same primary care doctor that I've seen for 25 years? The reality is, a lot of folks who make a transition in their life to be in senior living often have to make a choice about, moving to a new primary care provider because it comes with a geographic move, or you're now dealing with, family members who are responsible for your care. They may not have the time to kind of come and drive you to your legacy provider. Or the facility that you're living at may not have the resources to do that. So there's a lot of kind of changes in the model for how we take care of seniors that was already happening pre-COVID that was really accelerated post-COVID. So we definitely benefited from a lot of those trends. It just kind of got compressed into a timeline that was unexpected. So in the process of growing the business, we made all the changes I talked about and saw the benefit of it. I think in the second year, the business was growing really fast. We were adding patients, 10 to 15% growth month over month in terms of new patients coming on board. I spent a lot of my time hiring providers, which in 2021 was hard to do, to say the least, and negotiating, to bring them on when labor costs were exploding for healthcare. And during that process, worked very closely with my board, which included Aaron, who's on the call today, and really thought about what the next few steps were going to be. At that time, we actually were approached by a buyer who wanted to take this model and kind of do this nationally and had a lot of resources to be able to do that. And it was a great offer and really helped me meet all of my goals for the investment and return a lot of cash to my investors, which was a great outcome. So we ended up taking the offer, sold the business in 2022, early 23. I'm sorry, early 2022, and basically got to a point where we were able to hand off the practice to the buyer to grow. So that's the kind of far right side of the chart here, where it talks about exiting the investment. There's many different ways to structure these deals. In a traditional search deal, for you as a searcher, you're really looking for a business where the growth and the upside profit potentials where you're really looking to earn the most of your outcome as well. And it's really aligned incentives. If you do a good job and kind of grow the business the way you anticipate, it should be a great outcome for you, for your investors, for everyone involved. So it's really sort of a win-win model when it works well. Again, there's many different models of how you could do this, but this is the approach that I took. And I'm happy to share kind of whatever would be interesting to folks about that journey. Since then, I've worked with Trilogy on the investment side, learned a lot about how that works, mentored other searchers, looked at a lot of different deals, evaluated them with the lens of, what the knowledge that I gained about healthcare, especially from leading Crown. I'm actually on my second search now. I'm looking for the next business that I want to run, and have evaluated a lot of deals in the process there too. Some within healthcare, some without. So happy to share more about that.
That's great. Yeah. Thanks so much, Nikita. Really, really, yeah, really, really helpful to hear that journey. All right. I'll turn things over to Kara.
Okay, thanks, Brian. Well, hello, everyone. So great to be here. Thanks. And it's exciting to see so many people tuning in to learn about entrepreneurship through acquisition. I feel like a double whammy, as Brian and Nikita kind of alluded to here, but I come from the business that I own was actually my father's and purchased it from him. If there's anyone listening in today that is a family member working in a business or maybe even a key employee, someone that's been in a business a long time. And then I purchased the business in 2022. And as they said, it's a merger and acquisition firm. So we work every day with business owners and business buyers, doing sell-side advisory services, business valuation, and buy-side consulting. True to kind of the story of buying a business and doing something fun with it after you own it. It's been really great to work alongside my dad and learn from him in just a totally different capacity. When I took over in 2022, we were really serving Washington and Oregon. And now we have 4 locations. And I like to say we're West Coast to Gulf Coast, with 4 offices here in Seattle, Houston, Bozeman, Montana, and Portland. So it's been a fun ride so far. Um, Brian, if you could go to the next slide. This next one is a little bit hard to see, but this is a handout that I give a lot of people in our initial conversations. And this is just kind of the really high level view of buying and selling. And I was asked kind of to do a bit more of like the people side of this and preparing for ownership and navigating change. And my mind went to this kind of slide that I always talk about, with people kind of thinking about buying and selling. If you see kind of at the top, it says preparation and it starts at 5 years. So this journey can take a really long time. It doesn't have to be a quick decision. For me, and kind of preparing for this jump into buying a business, my family, my dad running this, my mom owned her own business. I feel like I kind of started my journey going to business school. So gosh, 12 years ago. And that was because I had that calling to go to business school to really learn. I was in marketing at small businesses that were VC backed, angel investment backed, and I wanted to learn the financial components. I wanted to learn the operational components. I wanted to figure all of that out and feel like I could understand business from the 300,000 feet and just not always be in the weeds every day of what I was in charge of. And did just that in business school after that. And I swear, I think this is a coincidence more than anything that all of us here are in consulting at some point. But I too went into consulting right after business school. And, again, for a couple of reasons, I still knew I wanted to do my own thing, but I also wanted to pay off my student loans, right? I wanted to go into owning my own business without thinking about that debt as well. In addition to that, I personally wanted to get some larger logos on my resume so that when I was talking to older business owners, I had some backing and credibility of some more well-known places that I had worked and had some successful stories to point to. So all of that, again, it really was a longer journey, and really wasn't until my dad kind of looked at me and was like, "Are you really coming to do this?" And I was like, "Okay, I'm coming. I'm gonna jump over." And really started, I had kind of the opportunity to just get in at the ground level. And that, I guess, could be looked at both ways, but I was thrown in just like any other of the people starting at our firm, and had the opportunity to really get in and see if I liked the business, but also was a great opportunity to learn and grow and just kind of make sure that owning my own piece was meant for me, and I loved it. And so again, that was probably in 2018, 2019, and then worked for a couple years before I purchased the business in 2022. And just kind of reflecting back on this whole journey, and navigating change, I think what has been so wonderful in my experience is doing this. Truly, I have used every aspect of my MBA, owning a business and running a business, and in particular in kind of this finance industry that I'm in. Getting to every day is different. And, from sales to marketing to operations to leadership to, giving feedback to team members, it's really what a lot of people talk about, of getting to kind of use all of those different pieces. And I think too, a big thing that I've learned and I think fits so well into this ETA concept is knowing my strengths as just a business person, and then being able to kind of honor that and then identify what weaknesses I needed to shore up. What can be really fun, and again, I get to see this a lot because I work every day with business buyers and sellers and those conversations. But knowing, what a buyer has that they can kind of step right into the owner's shoes, and what they don't have and what they're going to need to immediately kind of figure out how they're going to fill that. So for me specifically, my dad, he was the penultimate sales guy, right? He could talk to a stump and sell a rock to a rock. So, and that's something that I knew I'm comfortable selling if someone's engaged with me, but really the sales motion and doing that was something that I needed to learn. So pulling in someone to help with that, all of those kind of pieces have helped me kind of shape the company to what it is today. And other components of just thinking through and navigating that change. Unlike Nikita, I didn't get funding. I bootstrapped my operations. And so that's kind of a different piece too of thinking through that as someone thinking about buying a business, is how and what path you want to go to, go the financial route. And yeah, I think as I just think through all of that, I always go back to the wise Tan France of Queer Eye, once said that pre-Queer Eye, as he was building his business, he was like, it takes at least 5 years to get established. And I heard him say that once, and I probably think of that. Maybe that's my Roman Empire currently, but I think about that all the time. This is definitely a journey, but I will tell you, every day is different. I can be stressed, but I am challenged. And not once since I've started doing this have I looked at the clock and felt like, oh, I have to sit here for a couple more hours before I can head home. So all of those reasons, it makes it worth it. And just really appreciate the ETA communities that I have cultivated through UW, through the Goldman Sachs 10,000 Small Business Program, through my industry board. I mean, it is pretty amazing, all of the different groups out there that shore you up and kind of help you through. So that's my journey. Back to you, Brian.
That's perfect. Yeah, thanks so much, Kara.
Yeah, of course.
All right, Aaron.
Yeah, hey, good evening, folks. So my name is Aaron. I am one of the managing directors at Trilogy Search Partners. We're an investor in entrepreneurship through acquisition strategies, particularly search funds, although a number of different strategies. Maybe I'll just talk through this slide briefly. I think we've kind of covered some of it, and then I was thinking of maybe just say a little bit about the different models of ETA that we fund and see kind of happening in the market today. So from an investment perspective, we have we've had success in investing behind entrepreneurs that want to go and buy businesses, right? And so this is folks like Nikita, hopefully specifically Nikita again, who have found a great business to buy, are not generally bringing their own equity, their own cash to that acquisition. And so, when entrepreneurs are raising that first pool of capital, Nikita talked about search capital to pay themselves a salary, pay for costs like legal costs and diligence costs. That's money that investors like us are putting up. If the entrepreneur is unsuccessful, we don't get that money back. In other words, they're not on at risk for that capital. That's money we put up for them, hoping that they will then have that opportunity to acquire a business. When they find a business, then they often come back to investors to help raise that equity. And so that's when we're writing quote unquote a bigger check, or putting between usually millions of dollars to work behind them. And so from our perspective, we have the ability to own equity stakes in a number of generally profitable small businesses in the United States and Canada. There are some strategies and some investors doing this in other countries as well. We've mostly focused our activity in the US and Canada. And so this is a way for us to have exposure to that market. It's also a place where folks with really fantastic backgrounds can come and be kind of in the seat and have a chance to run a small business earlier in their career than they would otherwise potentially have a chance to do that. We're, usually the businesses that we are investing in are below $5 million in, free cash flow or earnings before interest, taxes, depreciation, amortization, or EBITDA. And often that means that they're below the size where larger private equity funds, larger acquisition strategies are trying to buy them. And so while it's of course, Kara's job to help business owners get the very best value that they can for their business. Often those businesses are trading at a multiple of earnings that's lower than what the same business that was just larger would trade for, and that presents an opportunity for operators and investors to purchase those businesses, grow them into that range. Where there might be a set of buyers that are willing to pay a higher multiple of earnings, and then have that multiple expansion be part of the returns that the entrepreneur running the business and the investors benefit from. I won't belabor the demographic tailwinds point, which is say this continues to be the case, as I think Christy mentioned at the beginning. There's just a number of businesses that need to turn over, and small business is a great job creator in the United States. Those businesses, there are businesses that, but for this model, might not have a next operator, and as folks mentioned, might be in a place of winding down. And for businesses that are creating real economic value, this is a great way to have a transition plan for those. And then I think this was also discussed a little bit, but this model really originated. There's some dispute whether it originated at Harvard Business School or Stanford Business School, but there's a professor at Stanford named Irv Grousbeck who was kind of the innovator around the structure that Nikita talked about a little bit. Since then it's grown significantly and probably at a point of exponential growth over the last few years. And so there's, again, as been mentioned, there's really a great community of folks supporting this path, supporting the different tools and best practices across the different phases of ETA. And I think people often talk about the community, the ETA community, as being one of the things that was just most impactful about their ETA journey. And I'm not a venture investor, but it feels people talk about there being a real difference of a kind of community that really is there to support entrepreneurs and to support the boards of these small companies that we put together and help companies grow. And then maybe I'll just say something about the kind of the different models. So there's Kara talked about bootstrapping her acquisition. There's sort of I don't know if you consider this a related kind of version of that, care where people get an SBA loan. In other words, they don't raise search capital. There's a great program in this country. The Small Business Administration will loan you money to buy a business. It's a 10-year note. The rates are very favorable. You do have to make a personal guarantee of that money. People have different views of how risky that is. My own view is in many cases, probably not that risky if you do it right. That limits the size of business that you can buy, but provides for an attractive source of financing. And importantly, the person taking out that SBA loan often, really controls the business, has some or all of the most or all of the equity in that business once they're able to pay back that SBA loan. The kind of investment that my firm does is slightly larger than that, and so we're buying businesses for enterprise values between maybe $5 million at the lower end up to 50, 80, even $100 million at the higher end, where there's usually a mix of debt and equity going into the business. Often the seller is helping to finance the sale, so they're providing some seller financing, or maybe they want to stay involved and they're rolling some equity, we would call it, into that transaction. And that's great because we're hoping that somebody as motivated and passionate and capable as Nikita is going to come in and run the business, but it's also going to be usually their first time. And so alignment with the seller and having the seller come along and be helpful in making that transition is really important. And we all have a lot of stories about that going really well. Sometimes that goes just okay. Sometimes it doesn't go so well, and you have to sort of think about how that might work from the beginning. And then between those two models of kind of a smaller SBA funded acquisition and a larger investor funded acquisition, there's a couple different versions of both of those. Sometimes folks don't raise search capital; they search while they're working. Search often is a full-time job, so it's often challenging to source a really great business part-time, but it does happen. People certainly work on it. People sometimes want to form different kinds of holding companies where they want to be able to hold these businesses for a long time. And there's a number of different strategies that we participated in. And then finally, I'll just end with what are we looking for as a kind of business to buy? And the first answer is really revenue quality. And so think businesses with contractually recurring revenue. SaaS software is fantastic to get into questions about kind of AI disruption, but also B2B services, healthcare services, home services, where there's contractually recurring or highly naturally recurring revenue, where you don't have to go and resell every dollar of revenue the business does every year. There can be cases where that kind of business is okay and really attractive, but we're looking for an environment where an entrepreneur that's the first time in the seat has some time to get their arms around the business, and maybe has a chance to make a few mistakes without the business really really being in trouble. So we're looking generally for businesses with fairly low operational complexity, generally low customer concentration, generally low technology risk, and high revenue quality. And then again, kind of in that, call it $5 to $20 million enterprise value range in general. So I think Brian, I'll pause there. I know we're going to maybe have a chance to take some questions from folks.
Yeah, Aaron, really quickly.
Oh, this other slide. Great. Oh,
yeah,
yeah,
we had, if you want
I'll say
to
something about
talk
this slide.
to this.
Thank you.
Great.
Yeah, this is a, you guys can find this slide on the Stanford Graduate School Business website. They do a biannual report on search funds. And so this shows the number of funds raised and acquisitions. So from that, you can kind of back out the acquisition rate. And then it shows the gross and net MOICs, so you can kind of tell how exciting these have been. And basically what you could take away from this slide is that entrepreneurship through acquisition activity is increasing quickly, and that it's been quite successful. In other words, folks have been able to create real value for themselves in operating and growing these small businesses. And so if you're interested in the details of that study, would encourage you to check out the website. It's easy to go find, and there's quite a bit of detail there.
That's great. Thanks so much for that, Aaron. Wonderful. Well, we are in that next segment of the night and where we turn things over to our attendees. Again, thank you for being here. And we already have two questions within the Q&A. So the first one, really for the panel generally, is what would be a good starting point for search? How do we find businesses that are ready to be sold?
Nikita, do you want to give a general answer, or maybe I don't know, you could add some what either you guys could add some specifics. I mean, the answer used to be, and Irv will talk about some of the folks that did very, very early searches. We'll talk about going into the IBIS catalog in the library and like looking up companies and sending them snail mail. Then there was of course a phase of being able to email them. I think we're actually now starting to be squarely out of that phase where unsolicited email is very hard to send at high volume. And so the answer is that a number of data services have grown up that around that helps you do that. One is called Grata. There's ZoomInfo is a similar product. There's a product called SourceScrub. Actually, Grata and SourceScrub are now owned by the same company. So at a high level, that is a database of US businesses that is searchable in all kinds of ways. And you can build a list of businesses that you'd want to reach out to from that. The other important thing to think about is that we encourage entrepreneurs to be thesis driven. And so you want to have a type of business that you're looking for, a thesis about the kind of business that you might buy. And that's because any one business is just not particularly likely to be available for sale when you reach out to them. Now, there's another way to do it, which is to find businesses that are already for sale by working with folks like Kara, right? So that in that case, you have a very strong signal that the business is ready to transact. Of course, it's also Kara's job to make sure that the best value is raised for that business owner, and so there are oftentimes reasons to want to have a proprietary connection, to be that first person that's suggested to a business owner that it might be time to sell. That's hard to do and requires some real strategic thinking.
Yeah, I can just add on as a searcher, there's a few different ways to go about things, but if you are thinking about, your skill set, your interests, your kind of areas of being able to add a lot of value to a business, that can be a helpful starting point just to say, hey, I already have experience with X, Y, and Z. Let's start there. Let me go network with folks in that industry and actually understand what does the landscape of businesses even look like. Sometimes, I worked in aerospace before I shifted my career, and I actually did spend some time looking at smaller manufacturing units in the Seattle area and so on and so forth. And some of those were brokered businesses, so I could approach the broker and ask, hey, can I get more information about this particular business? What kind of information was available about their financials or their history or anything like that? And then from there, kind of understanding where there may be pockets of opportunity to go deeper, or where are the reasons why this may not be actually where I want to spend more time, or a reason to kind of close the book on a particular niche or a particular industry. I'm sort of a lifelong searcher now. Anytime I'm driving past something, I see something I don't recognize, and a business type or industry or just something random catches my interest. I'm always looking up, what is that business? Does it look like it's privately owned? Is it venture backed? Is it, local? Sort of those questions come up all the time, and you kind of just want to keep that element of curiosity about everything you see and the businesses that you encounter in your daily life. Sometimes that can just be helpful starting out.
Man, we got a bunch of good questions now.
We do. Yeah, we got quite a few in there. So I think we can jump to Jeremy's question. So what does Trilogy Partners look for when qualifying would-be acquisition entrepreneurs?
Yeah, sure. Thanks. And maybe I'll just try to do these sort of lightning round type way just to give an answer, and happy to follow up and stuff. But we essentially look for four things. We're looking for distinctive past experiences, and that's because we're generally asking someone to do two different and new things: find a business to buy and successfully negotiate and buy it, and then run it. And it's tricky to figure out what's going to make someone good, or how to predict whether someone's going to be good at those. So distinctive past experience, some degree of just drive and killer instinct, high EQ because we need the folks to be able to run the business and lead that team. And then the last thing is a really clear understanding of their thesis and what kind of business they want to buy. So distinctive past experiences, killer instinct, high EQ, and a great thesis statement is what we evaluate for.
That's great.
Actually, a rubric that Nikita built for us several years ago. Thank you.
Nice. We have another great question here. Shouldn't the goal of running a business be long-term success and sustainable growth? Why is an exit strategy important when running a business? Kara, do you want to talk about that?
Sure. I think the goal can be whatever you want it to be. I think, again, if you have investors behind you, they're going to want to know what you're doing with their money. But let's go back to more of the model Aaron mentioned about self-financing, getting an SBA loan. I have lots of business owners that's something that they put front and center as they're trying to get in front of business sellers, is saying, I'm here to hold this for the long term. And even, when I'm talking to business owners today about what their exit strategy is, it's okay if the goal of owning your business isn't to sell. That's totally fine. I think the big thing that I try and talk with business owners about is what's important is that you know what your plan is. And so if your plan is to sell, then there's things that you need to do to make sure that it's saleable. If you're just happy running a very nice cash flow business, good on you, do it. And, again, I think a lot of times if I get someone calling into me and says, hey, I'm looking for a really hands-off business to buy, I want to be a passive operator, I'm like, oh, me too. Let me know if you find one. Those ones are really hard no one's going to sell them because, business owners have that on autopilot. They're checking in and they'll run that, maybe hand it off to their kids, maybe hand it off to a key employee. Or if they've kind of run it down and haven't been taking care of the machinery and the CapEx, they might just kind of run it down until it's dead and kind of scrap it and hand the keys over. So I think that's a great question. And I think there's lots of options for kind of what your end goal is. And there's no right answer. I think it's about what you want the goal to be.
That's great. We've got, again, a lot of fabulous questions here. The next one is, can you talk more about strategies to deal with part-time search while working full-time? Who'd like to take that?
I can just take a quick pass at this. I'm searching, as I mentioned, for the second time, but I'm also a full-time primary parent. So this is maybe relevant to some folks in the audience, which I have a newfound appreciation for as very much a more than full-time job. So, but I think one of the things that can be helpful is starting out making those initial kind of thesis statements and putting that down on paper, really understanding kind of where your, as I discussed before, your interest and your fit kind of aligns with existing businesses. Sort of taking those initial steps while you're working can be very, very powerful and can make the decision about whether to go full-time or not much easier, as opposed to saying, I'm going to kind of pull the cord and go full-time and then spend a lot of time kind of building the tools and the infrastructure and the thesis and all of that. So a couple of things I might say is pick a couple of industries that you may have a foot in the door in already. Maybe go to a couple of conferences or industry events or networking kind of places, whether that's virtual or not, to kind of start building some connections. Put some tools in place, which is, hey, it might just be creating an email where you can kind of have some correspondence with different folks, look at some broker deals in that particular industry, and then kind of branch out from there. That can be an easy step to take if you have just a few hours a week kind of to start out. The other strategies, Kara, Aaron, you could probably add on.
Yeah, I guess I'd say I think it's like it's very alluring. All right, can I just keep doing what I'm doing and find a great business, and then I can just leave and go do the. I just know many more folks that have tried to do it than have done it successfully. And the issue is you really want to look at a lot of businesses to know that the one you're going to go buy is the best possible one you can do. It's so important to find a great business. Now, in Nikita's case, because she did that once already, so like, I'd argue she's a real leg up on doing it the second time. So I think you can start out with that really strong thesis work. You're probably going to be looking at something that's geographically closer to you. I think if you're doing it part time, not always, but often. And just try to think about how to make sure you don't sacrifice on the quality of the business, yeah, just because you have a little bit less time maybe to dedicate to the search.
That's great. So we have another one here. How do you recommend aspiring operators test whether they actually want to run a small business day to day?
Can I
I have
say
one
that?
answer to this. Oh yeah, please, Kara.
I was just going to say, am I allowed to say the obvious? Sign up for the certification program that starts in February. And I mean, really, the whole goal of it is to give you 10 weeks of what this whole thing looks like, of how to search and what operating a business. If Christy will say it if she's on screen, like if a goal of you coming out of it is going, this might not be for me, then that's a win. So that's like the exact reason that UW has put together this ETA certification program that's starting. So really excited to get all of you in there. And it's a pretty cool way to see if it's a fit for you.
The search also can be a great test run because you're effectively running a small, very, very small business as a searcher, really keeping yourself disciplined around actually running a process, following through on kind of your plan to either explore a new industry or something like that. It's indicative of if you're the kind of person that's going to survive or thrive in an environment where there's not a lot of direction necessarily other than what you're putting forward in front of yourself day to day. So it can be a great chance to sort of experience that and love it, or you may feel like, hey, no, I actually would rather do this in a much bigger setting or a much more kind of structured way, et cetera, et cetera.
That's great. There's a question specifically for you, Aaron, in here. Small business acquisition, understanding that the below two are not mutually exclusive. EBITDA versus revenue multiple. What is your perspective on the weight, quote unquote, or focus, quote unquote, between them?
Oh, I love it so much. I'd love to just chat about this for, 30 minutes. It really depends on the kind of business. I mean, the easiest way to understand it is that from our perspective would be we're really looking at EBITDA multiples with probably a minimum EBITDA margin, right? So we'd really say, I should have said this when we talk about the kind of qualifications of the business. We really want to look at like a 15 to 20% plus EBITDA margin. That's just showing how much of the cash flow of the business is actually available for growth. And if you're down, below 10 or 15% in EBITDA margin, it just means you're not getting a lot of leverage out of new revenue into that business. So the main case where we focus on a revenue multiple is with software as a service businesses or SaaS businesses. And the reason would just be that in theory, were you to stop new product development in a SaaS business, substantially all of the incremental SaaS subscription dollar drops to the bottom line and is so like EBITDA. So it's sort of like you're saying in SaaS businesses, a revenue multiple is sort of like an EBITDA multiple. It's not really that simple. It's just an overgeneralization. There are other cases and other particular industries that tend to get valued on a revenue multiple, but honestly, the size of things that we're talking about today, EBITDA is really what we're focused on.
Great. I think we have maybe time for two more very quick questions. So we could take the next one. Any practical tips on how to work with lawyers to gain legal advice in your business transactions? So contracts, tax, IP, etc.
I just say I think they're key partners and they can be also expensive partners, and you should find the right the right person for the job and the right firm for the job is really important. We are very often negotiating with business owners who don't have really good advice, like from Kara, and so they have asked the person that did their estate plan 5 years ago to help them sell their business, and that might be a very nice person, but not really have any idea about how to help sell a business. And so, like, I think the main thing is make sure that the person you're hiring is actually experienced at the thing you want them to come do for you, and understand that there's, in most cases, generalist attorneys are not a thing. A transaction attorney and a tax attorney and an IP attorney are just not going to, they're not the same person. And for small businesses, that's tough because you're not going to want to just call a big law firm and ask for the partner that does X and the partner that does Y, and the partner that does Z, and that's what can make it a little bit more challenging.
Amen. There's always ask for that they have transaction experience. And if any of you get to that point and you need a recommendation for an attorney that's like kind of right size for your transaction size, reach out. I'm so happy to share great resources here in the Seattle area. There's awesome attorneys for every size deal that you want to work through.
And you may not be a big deal client for that attorney, but Kara might be because she recommends 50 people a year to that attorney. And so, like, if it's a recommendation from her, it really matters. Like, they're really gonna pay attention to you. So, like, that's great advice.
And just really quickly, given given the time, maybe this last question and the other ones that I think remaining will be, really nice dovetails to talk about the course in and of itself very quickly. But for self-funded searchers focusing on a regional search, how effective is it to search across 2 to 3 business types versus a narrow sector focus?
I think you kind of have to search across many. So your trade-off is regional versus, industry focused. It's hard to do, kind of keep both of those very narrow, because then the number of potential businesses that fit that would be very, very small. So I think if you're a self-funded searcher, and doing something regional, your kind of net needs to be really wide. And I would kind of maybe you do want to filter on some characteristics of the business, but not necessarily industry type, just because specific regions, are going to have a little bit of a different mix of the industries in that zone. So, if you were up in the Seattle area but really wanted to do, I don't know, gov tech or something, there's going to be a very, very small pool, for example. I think it can be helpful to keep it narrow just initially, just to know, how you want to search, and kind of whether you want to search, and kind of to that earlier discussion about, whether you want to be part-time or full-time, whether you're going to be self-funded or actually go out and raise a fund. To help answer those questions, kind of starting with a small net might make sense, but eventually I think you'll want to go pretty broad.
That's
Can I
great.
add really quick, because I
Definitely.
see it, and when I have someone come and they say, I've just started and this is what I'm looking for, I go, great, can't wait to hear from you in 6 months. And then they come back and they're like, okay, I'm back and now I'm looking, and I'm like, that's what I thought. That's better. So I think about the framework and what you're interested in, and it doesn't just have to be industry. It can be like what you're good at. I mean, Nikita, that's a perfect example of like your aerospace background, but then you ended up with healthcare. But I know that there was things in there that really resonated with you and why you could build that successful business. So, there's fun ways you can think about how you can plug yourself in and be effective. But I agree with Nikita, like, try and be as big as you can with a good thesis included.
That's perfect. Yeah, thank you for that. Well, great. Because Kara, thank you so much for the earlier shout out. Again, all of this and your great questions that are, that have been passed and they're still remaining, within the Q&A. Perfect opportunity again through those 10 weeks with the new course that we have, starting up here, that Christy Johnson will be heading up both the developing and teaching this course. It starts on February 2nd. It's 10 weeks. Fundamentally, it's asynchronous online. Again, that means you can learn at your own pace week to week. However, there are 2 meetings that are going to be happening live over Zoom. Fantastic opportunities for networking that is going to be happening. And again, the folks that you've been able to meet tonight, in addition to Christy, Kara, Nikita, and Aaron, active board members, along with a few other folks to really help individuals on that journey, both during the course and after it as well. So just want to say again that those applications would be due by the 19th, and we'll have the all that information on the website there for you. So we also want to say quickly, keep learning with us. Join these series, incredible, insightful series from experts. Look for our winter programming on our events page. You can stay connected to us by also subscribing to our email list, receive event information, career tips, industry trends, program information, and so much more. You can visit all of that at pce.uw.edu. And I just want to thank everyone for joining us tonight. I want a special thank you to Christy Johnson, special thank you, as well to Nikita, to Kara, to Aaron. Thank you so much for sharing your tips. Thank you so much for sharing your stories, how valuable they were, really, and for answering all these fabulous questions, and for everyone for attending tonight and for asking those questions. Thanks so much, and have a wonderful evening. Okay, take care.